Welcome. CalCPA and the Education Foundation are pleased to bring you this free webcast and give CalCPA members an opportunity to learn firsthand about the proposed return preparer regulations and ask questions. We have with us today David Williams, Executive Lead for the Return Preparer Regulations Implementation. That's a mouthful. We do have a sold-out crowd, so please start typing in your questions early, and we're committed to getting to as many questions as we possibly can, but we are not certain we will be able to get to all of them. A final note before I introduce our speaker is that this webcast is for information only. We are not awarding CPE. However, we will be posting a recording in the members area of our website before the end of the day, so you can refer back to it for future information. Again, David Williams, our speaker from the IRS today, is Executive Lead for Return Preparer Regulations Implementation. In January 2010, David was asked to lead the implementation of the Internal Revenue Service's recommendations on tax return preparer oversight. David serves as the principal advisor and consultant to the IRS Commissioner on this landmark effort and is overseeing matters related to regulatory changes, policy, and impacts on organizational processes. In addition, David continues his regular role as Director, Electronic Tax Administration and Refundable Credits, where he leads the effort to redefine the IRS approach to electronic interactions with taxpayers and tax practitioners. David, could you please tell us about the proposed regs?
Well, first of all, good afternoon, everyone, and thanks for watching today. It's a pleasure to be here, and I think what I'm going to do is to spend a few minutes describing what we have in mind, and I suspect it'll prompt some questions from you. Hopefully, they'll come in a reasonable manner so we can try and get to as many as possible. And hopefully at the end of this that you'll leave with an appreciation of a couple of things. First, our effort here is to really improve the standard of tax administration nationwide, and it is not aimed at culling folks out or creating challenges or barriers for tax professionals, but rather to improve the overall quality of tax administration in the country today. Secondly, we recognize something very important as we're doing this, and it basically boils down to this. 60% of all Americans choose a paid preparer to complete their income tax returns. Another 30% use tax software. And that means more than 90% of all Americans need help and seek help to complete their returns. Now, that's probably a commentary in part on the complexity of the tax system, but it underscores a basic fact, which is that to the extent the IRS is interested in improving tax administration, we cannot do it without you. And that one fact really underscores everything that I'm going to talk about today. And to the extent that you are listening and you think about it, keep in the back of your mind that point, that we recognize we cannot really administer the tax code without you, and that what you bring to it is so important to us that we're taking steps to ensure that we improve the quality of tax administration across the country. Now, I know I'm talking to CPAs. I don't want to use the word elite, but I do want to recognize that, as the law does, that there's a higher standard of education, professional development, and professional requirements that are part of being a CPA. And so I suspect that many of the things I'm going to talk about today, one, will not necessarily apply to you per se, and two, I want you to understand we don't believe they're a reflection on the professionalism that you bring to your jobs each and every day. So with that as a background, let me talk a little bit about how we got to where we are today and why we're doing what we're doing, and then I'll give you some of the details. Just a little bit of history. With each new IRS commissioner, there is always a sea change, if you will, in at least the outward approach that the IRS takes. We have, as every agency does, a strategic plan. And it's kind of funny because with each new commissioner, you get a new strategic plan. And we kind of joke about it because it's not as if you just threw out that old strategic plan because it was all garbage, and that the new one is new and different. What it really is that the basic outlines of those plans are similar, but each has a different emphasis. And it's that emphasis that brings us to where we are today. Because with our new commissioner came a new emphasis on what I described to you before, the central role that tax return preparers play in tax administration. And so our strategic plan adopted under our commissioner stresses the role of return professionals, and as a result of it, prompted the commissioner to ask 2 leaders at the IRS to take on the task of reviewing tax return preparation, in addition to which they were asked to look at tax software and what I'll euphemistically refer to as bank settlement products. For those of you in that business, and I suspect most of you are not when I'm talking to CPAs, I'm referring to refund anticipation loans and other bank products associated with refunds that come from tax returns. The commissioner asked our deputy commissioner, who is in fact the former CEO of one of the largest tax return preparation firms in the country, as well as the head of the Office of Professional Responsibility, to look at tax return preparation. Now, I know most of you know what the Office of Professional Responsibility is. When I speak to more general audiences, I ask for a show of hands, and interestingly, generally 10 to 20% actually know what it is. But I think you know that the Office of Professional Responsibility oversees practice before the IRS. Practice by attorneys, CPAs, and enrolled agents. And in fact, it's the only place at the IRS where today we actually set standards or review standards of professional behavior with regard to tax return preparation. So it was natural that the commissioner would ask the head of that office and the new deputy commissioner who had run a major tax preparation firm to conduct the review of tax return preparers. We held hearings around the country. The AICPA testified at them, as did many other groups. We also heard from tax software companies. We heard from consumer groups. And I would say the consensus was virtually unanimous. And I will sum it up in a phrase to sort of get us on to the meat of what I'm going to talk about. Many of you may know that the IRS actually has an oversight board. Much like a private sector corporation, which has a board of directors, we actually have a board composed of private sector members that advises the commissioner. And they have for some time pushed us to conduct a look at return preparation. And it was best summed up, I think, by one of the members who said, bear with me when I describe this, that she'd been having her hair done. I guess done is the word. Men get it cut. But done involves a lot more money, apparently. And she was sitting there in the chair looking at the mirror, and right there in the lower left-hand corner was a little license that said that the person who was doing her hair had passed a test and was licensed by the city in which she lived. And she said, you know, the light bulb went off. If the person who is doing my hair has to be licensed and has to pass a test, why is it that the person who's doing my tax return, which is one of the most intimate financial transactions anybody can have, does not have to have any minimal competency standards whatsoever? And if you think about what we're describing today, it is that thinking that underscores what we're about to talk about. Now again, as CPAs, much of what I'm going to talk about will not have direct relevance for you. However, one of the things that we are doing will have a significant impact and may affect your business model. So as we go through this, think about the notion that we're trying to set minimal competency standards for return preparation. That was the primary recommendation that came out of the review conducted by our Deputy Commissioner and the Head of Office of Professional Responsibility. If you'd like to know more about those recommendations, the report that contains the recommendations is available on our website. It's a long one, but it also contains a lot of information about the thinking that led us to make the recommendations I'm about to describe. There's an executive summary if you happen to be a little busy, and it's a good place to start. And I'll also caution you that some of the recommendations we made in that report have now changed, and I'll try to highlight some of them because they may make a difference for you. So let me talk about what we're proposing and what we plan to roll out over the next several years. First, and probably the most important thing that I'll talk about with you, is what is the definition of a return preparer. This will have a substantial impact on who must, in fact, complete the entire regime that we are proposing to require of return preparers. In the report, we adopted a proposal that essentially said a return preparer is the individual who, for compensation, and that's an important distinction, not a volunteer, but someone who does the return for compensation, and signs the return. So it is the individual who signs the return. As we made that announcement, we honestly got a lot of pushback. We heard from the National Taxpayer Advocate. We heard from members of Congress, a significant number of members of Congress. And we were the subject of editorials in a number of national newspapers, including USA Today. And basically the message was that if you focus only on the individual who signs the return, you are missing a crucial element in the return preparation equation, and that are those individuals who may prepare the return, but who don't sign it. And as we sifted through the feedback that we received, we modified the definition of who is a return preparer. And when you look at the proposed regulations, and they are out for notice and comment, and in fact we received many comments from CPAs, from attorneys, from tax return professionals of all stripes, as well as consumer groups. The definition that we've proposed to adopt, we have not yet adopted it, is that if you prepare all or substantially all of a tax return, you are a return preparer. Now, what does that mean? It means that you needn't be the person who signs the return in order to be covered by the requirements of being an IRS registered return preparer. What it means is that you, as professionals, will need to exercise your judgment about the judgment that other individuals exercise with regard to a tax return. It's not a bright line test. As an administrator, someone who's trying to administer a set of requirements, it would be much easier for me to say, I'm focusing only on the individual who signed the return. When you move to all or substantially all, things get murkier. We will provide some examples and perhaps update them as time goes on. But what we're contemplating is saying that those individuals whose judgment is substantially affecting the outcome of the return, whether it's a refund, whether there is a balance due or something in between, those people, whether they sign the returns or not, are return preparers for this purpose. Now, I'll be honest with you, we've heard from a number of CPAs who've raised concerns about that, and they've identified a model, which I suspect many of you have, in which there is a signing CPA who takes the responsibility for attesting to the fact that the items on the return are duly prepared and accurately prepared. And there may be people in that office, whether they are CPAs in training, I used to be one of those until I changed majors in college, or other paraprofessionals in the office who contribute to the return but don't ultimately sign it. And we understand that the model that folks describe to us does place accountability with the person who is signing the return. But our concern is, as I described at the outset, to assure a minimal level of competency. And as a result of that, we are focused on ensuring that folks who exercise substantial judgment over that return are covered by these requirements, whether or not they sign it. Now, we are meeting with groups of folks who have concerns about this, so stay tuned. But for now, the definition of a return preparer is someone who, for compensation, prepares all or substantially all of a tax return. So given that definition, what are the requirements? The basic one, and one that will apply to everyone, whether you are a CPA, an attorney, or enrolled agent, or someone who is unenrolled today but will be covered by these requirements, is that for the coming filing season, you must have a P-10, a Preparer Tax ID number. Now, many people already have P-10s. We created them originally as a convenience to return preparers who did not want to place their own Social Security numbers or employer ID numbers on returns. So they were originally created as a convenience. As we move through this process, we are changing the way in which P-10s, as I will refer to them, are used, and they will now become a requirement. As you sign a return in any day after the end of this year, you must not, in addition to your signature, you must affix to the return your P-10 as the signer, not your SSN, not your EIN. And that will be a requirement for anybody who prepares and signs tax